Hey everybody, welcome to December 19th Principal Profit Trader Coaching Call. Well, we're going to get right into it. We're going to examine some higher time frame ideas, and we're going to examine some cues that we can help us on the lower time frames to deal with pretty tricky market. So let's go out to the weekly chart on this time frame, right? Now, just straight up bearish scenario. Let's just hide these for a sec. Right? We are on a very special 100 SMA, right? And if we don't hold this, it's eerily similar to when we made a new all-time high, came back down, had this strong move down, just like this. New all-time high, came back down. Then came up for the second double top, built structure, and then had a violent crash down. Came up, built structure, even more violent crash down where, we almost went straight line into this. And now we're kind of going sideways. And the question is this going to be this sort of shoulder, head, shoulder that then breaks us down into an extended bear? I mean, that would be pretty crazy that could take us into a crazy bear market. Of course, it starts to turn earlier than that, but that's the idea of we can make it just look like this even. Okay. That would take us to around next year, like basically a year-long bear. But as long as this continues to hold, and it's not just this moving average, I would say it would have to be this zone here, pretty much this key swing low between like 74 and even this launching point. If we break that, it's just going to go sideways for a while, and we could potentially be having a a head and shoulders that breaks us down. And that is a situation where we can have a long bear market. Now, what is different about this cycle than last time? Very simply, if we go to the previous 2025, I'm sorry, 24 November, and that double top that it made in December, November of 24, right? And then we do the swing high down to the next swing low. We're going to notice a couple of things. I took that when it made a new all-time high and I pulled back there. I did one here for here, right? We'll start even from here. Okay. Just to back test this, we can go back and do this a couple of years. Pretty much every time it made a new all-time high, right? Then it pulled back and hit this swing. It at least then broke above, if I go on the lower time frames, there's certain ones that I'm using for intraday stuff. Intraday stuff meaning, a pullback intraday, but there's certain ones that I'm going to use for extensions like 100% range pullbacks and things like that. And as you can see here, every time we've done this, if we're going to do it here too, we break 1.41, right? And then we go to 2.36, we top build, and then we pull back before we have a significant pullback. Now, let's see if we can do that again here. Go here. And I could do it from there to there and to the previous pullback, which launched us there as well. And we'd have to go back and do it a few years as well. But as you can see here, this is the one time, right, where we came up. We usually break up of 1.4, and then that acts as support. And then we go up and test 2.36, and then we have a significant pullback. Well, we didn't get to that 2.36 that hit the last few times. So it's a possibility that if this holds, we can possibly get that extended, anomaly of the fourth cycle closure period that people are talking about, that the four cycles are dead. And then we can get a strong move up into 2.36 here. But as long as, and that scenario is intact still, as long as this moving average and, this zone holds. If we don't, then we're talking about an inverse bigger picture, not an inverse, just a regular head and shoulders that could then take us to at least an extended bear market, right? where we're now talking maybe having to test this. This becomes the head, and then we go back into here. But if we can hold, I mean, I know that's like classical TA, if this, then this, but I mean, that's really the best that we can do at this point because if you just look at the fear and greed index, we haven't been at this sentiment of fear since Bitcoin was around 15 to 16,000. So that's pretty extreme. And it's been very tricky on the smaller time frames as a trader. We'll go into that as well. But I just wanted to talk about this inflection point that we're at right now as investors, right? All right, save this, X this out, go here now. Okay, so as you can see on these lower time frames, initially when you know, it's a very tricky spot. As you can see, I have these wide zones, and we're at a spot where the recency of this big picture bearish bias has now went into a sideways phase, a very volatile sideways phase where you're prone to these overshoots. Like intraday, it'll feel very bullish. Like you'll have a huge, large green, powerful the candlestick patterns where there's good pace and momentum, but they're so extreme that they actually reverse because you have to remind yourself, hey, we're in a sideways phase. So pretty much the last 3 days, all the bullishness and bearishness reversed intraday, and it was psychologically and emotionally very difficult to trade on my nervous system to fade that type of momentum, especially when a couple times I'm in it, it was the perfect entry, and then due to fear and watching it, I get out, and then it happens to be the right move, and then you take the long one, and then actually take the loss on it, and then it did end up reversing, but your energy is so low, you just don't have to take. You didn't have the energy to take it. Um, it's 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 not the easiest thing to do to trade pre-holiday, especially when we get these kinds of overshoots. You can see the last couple of days I've even had sort of showing this little overshoot trend, and now we're in a situation where we're getting a lot of momentum up in Bitcoin, and it'll probably on the daily at least touch this moving average. Let's go to that real quick. Right. So intraday, it looks extremely bullish, but the last 5 days has been this sideways phase. We're kind of scrunched up in here, and we do have this insane inverse zero line reject, which is one factor if you wanted to go against this. But I mean, it is looking like a double distribution trend day. If you go on this smaller time frame and you at least go down to the 15, let's do that. You see, these were easier shorts for me to take because this one went straight line into it, and you had a huge hook from extremes, and then out of nowhere, an insane vertical volume spike that shows exhaustion. Okay. This one was harder to take. It creeped up, but it still then out of nowhere had its largest candlestick towards the high extreme of the day, like not at the start of the low of the day. And then it also popped up, and then there was a retest that was also like I did short that here, and then I got stopped out when it came back up, and then maybe just due to nerves, I was like, oh, what if it overshoots a little bit, just like the long that stopped me out yesterday? Like this is not easy. But that one would have worked out if you just do it on expectancy. That was an intraday double top. That one made money, right? Then there was this low of the day. It pushed back into here. It did look extreme, and it did come kind of sharp down like this. But then part of me's like, well, the pattern is it does kind of make another leg down. But we are already into that support. So, I took the trade, got stopped out. Yeah, if it was a little wider, I would have been fine. But like there's imperfections in this game. Like there is no perfect here. Why? Well, you said it was a 2% rule, and you would have made money if you just had it at 2%. Well, I had it at 1%. Like, what do you want me to do? I didn't want to take that. And then by the end of it, my nervous system's so shot. I actually couldn't even like wanted to look at the screen. I was like, I got to take a break because I have to maintain an optimal state of mind, or it's like I can't do any work. You know what I mean? In this game. Hang on 1 second because I don't know if this is 89081. Yeah, this isn't accurate. Let me. Why isn't this one accurate? 1 sec. Let me just save the zone that I have here. There we go. That's my updated zone. Sorry, I have it updated on my other chart, but I just wanted you to see my zone update because folks have been asking how I build zones. Now, I also look at direction, not just with trend lines like I do, but I also am looking at day type. Like, this day had greater odds to be shorted because you want to see strength at the beginning of a move, not at the end of a move. Same thing with this one. Now, with this one, it was hard. It was psychologically harder for me to short, and I almost didn't short this because this is that double distribution trend day, if you will. It's like distribution up, distribution up, distribution up. Like that has greater odds to keep going than something that goes like this straight line or creep up, explode. But this I was just talking about how the psychology of taking these is so difficult because intraday, in other environments, when you have so much bias, you're like, oh my God, I would never go short. Or yesterday, oh my God, I would never go long. Or every time it went up, you wouldn't think it would have reversed the whole day, and then it's so bearish. By the end of the day, because it took out all those, it's like harder to go along. But that's sort of been the pattern. Um, where we're in this like sideways trading range, and it's nestled right here below this nasty moving average now that is broken resistance now acting as broken support now acting as resistance, just sort of trading around. If we break above this, we have a nice balanced breakout 5 day that's going to take us up to this moving average where sellers will be active again, no doubt. And coming from the support zone, you might say, okay, well, it is back and forth, but let's zoom out. This resistance zone takes us down to here, right? And yeah, that would be a Christmas present. That would be amazing because the other thing too that's harder for me to take shorts is I have portfolios and position trades that I'm betting on the long side. So even though it's correct process for me to short on my day trading futures swing trading account, it's harder for me to do so because I'm rooting for the other side as well. Just like, and the only thing that I can say is that you have to reduce the amount of voices inside your head that are telling you different things, different chatters, different things. Like even the news outlets can be a distraction if you don't reduce it to what I've done, in my opinion, where I just I just add it to a probability of increasing volatility. And even like I say, it increases the odds of a trend day. Yeah, because trends correlated with volatility. But lately, it's just increasing the odds of an extremely volatile sideways day, which are brutal to trade psychologically. Like choppy sideways with normal ranges, those are easy. The ones that start to look like they're trending because the volume spike goes insane, just keep in mind, even though the candlesticks are extreme, if you look at the relative volume, except for today, today's decently strong, but most of the time they're average, right? So it's almost like you can see like, oh my God, if it's average volume, there's less odds for these things to be trends and higher odds for them to be reversals, volatile sideways days. Um, in hindsight, I might just make a rule like, the last 2 weeks of before Christmas, I don't trade because they typically aren't really profitable weeks for me. And this proved it. Even though I could read the market well, I had the short the psychology of trading this type of market is really tough on the nervous system. There almost has to be a sense of identity with the observer because if I just identify what the body's going through while a trade works out or not with money on the line, it's like it could be a bit much. So everything feels good when it's more obvious, but obviously the last since November 21st, um, you know, like I have marked in that multiple time frame analysis category the big picture buys being anywhere from a month to 3 months because that does affect the big picture bias. But remember that big picture bias, the month to 3 months, then has to interact with an intermediate term bias, which is 1 to 2 weeks about, or a short term bias, which could be anywhere from 1 to 4 days, or some giant extreme move, which then changes the bias, like when we had that crash on September 6th. So yeah, I mean, let's rewrite this. Let me see what the chat says. One new. Crazy long wicks. Yeah, they're really crazy long wicks. And I just have to, one of the cues that I have to remind myself is that like this was the high of the day, but I didn't have my first initial support at the high of the day, current day. I had it at yesterday's high because to me that's the trade location that I need to have an edge, right? So one of the things is like you could have had a resting. I had a resting order here, right, with the stop a little bit higher than this, or even into this, and then you would take it again if you want to do it like a half hour. You have to measure the percent on that. There, you can see my zones are never more than like 2% away. If I can get an entry order um, where the stop is, where basically if I get such good trade, let's see, if I jumped in here, then I have to have a super wide stop, which I did, unfortunately. You know what I mean? I before this picked up, but I have enough wherewithal to know, okay, well, here's my stop. If I'm going to take this one because it's topping and it might pop down here, I have my stop here. It just erodes the edge on days when there's ambiguity. You have to, and I have this. I say, you have to be okay with missing out if you don't have excellent trade location. So this isn't just hindsight bias. These are conversations that I'm having that I write as a system in the channel where it's like this was the first zone. You take it at the middle to the back on days where you're going for a tradable reaction. Now this was a tradable reaction. Now I could have actually financed here because I have an action, odds for reversal if you wanted to reduce risk. Now, one thing I've been doing too is I'll go here and I'll just look at what's going on this chart. As this is going up, Bitcoin goes down. So, a little bit of a buying tail isn't bad, but, you know, to be able to, on most days when it's around this and and it's distributing, I would not be going long. Like on every, like I said, it's just been this sideways market we've been in since we were in this basically we were in a balance here, right? And then when we broke down from this balance, right, the high volume node of this balance became a really strong key reference area. That's what this is here. So if we actually draw a and let me get the right chart over for you guys. Can you guys see this chart?
Yes.
Okay, yeah, I think so what happened was we were in a balance here. If you guys can just think in terms of trends and balances. We had a candlestick breakdown, which would be like a bearish engulfing or something on your daily call, and then we go into another balance. So when we want to draw zones, right? If we just do a key reference area here, right? I mean, I didn't even have to draw that to know that was going to be the VPOC high volume node. So remember, the VPOC is the actual red line. That's the time it spends the most price at. I had my S&P coach. He's like, I made a living in 2008 only going long on V, waiting for them to pull back to these giant things. It was a directional market. Every single time it pulled back to one of these confluence zones, it became a really high odds. Now, if you just think in terms of sideways only, you would only be going short here and only going long maybe in this lower band. And you know what? If you have the amazing patience to do that, you actually might be more profitable. I'm not even kidding. I mean, I've intellectually called this right, but psychologically to execute it, there was no reason that I personally got out of two trades that eroded the edge because those would have made up the whole week. But you just happen to get out of them just because you're scared, and then you take the loss on the one you do hold, and it's like it erodes everything. So I guess what I'm trying to say is that any edge I can add to it. So if I didn't, besides these range extremes, highs and lows, we have to be a little bit more sophisticated. I often think of the high volume node, which is just the biggest node out of all this sideways price action, and you can draw one anytime you see it go sideways. I often think of that as the hidden support or resistance zone. It's hidden. It's not normally seen. So while someone might be waiting for this, this is if you have the ability to hit these every time, and we can see the zones are actually calling it better than my own personal execution. Me breaking a rule and not waiting for this zone got me worse trade location right now, where it's like I could have at least financed right now and not took a loss if this doesn't work out. But since I jumped in ahead of the zone, so like I said, I write the rules of the system in the channel because it's up to us to press the button when we're under fight or flight to make that decision. I mean, I know what to do. I had it at the right zone. I had it at actually the back of the zone. This would have been so perfectly oriented, but I saw it kind of go down a little bit, and then I was like, oh, I don't want to miss it, and then I jumped to market, right? And that's that erodes your edge. So the NLP is like on. That's why when I write, if you just say I fade the high of the day or fade the low of the day, you're not qualifying enough. That's why I have zone fades for reversals as rules and then zone fades for tradable reaction, ZFTR, ZFR, because they should be different things. Like a zone fade for a tradable reaction is something that you would be hoping for when maybe not as many things are on your side. You're in a good zone. It might be short term exhausted. It can get to the VWAP, right? A reversal would be, hey, I'm at such good major support. Bitcoin's making a triple top. The RSI has crossed bearish on the weekly and bi-weekly, and we're 8 leg counts up. I'm going to start shorting now, and I can get aggressive because I'm expecting a really big move. Since I'm expecting a bigger move, I have a higher expectancy because my risk reward ratio is higher. So it's not just, and the other thing too is we're looking for is the confluence zones, right? Shorting this high because this top built had less confluence than shorting this high because of the strength of that and what it was near. The other thing too that this hit yesterday, just if you want to see how the art and science of these zones really work, I had my original zone. Yeah, the reason I didn't get back in on this one that I got profits on this, but then when it did the double top, I just got scared and didn't get back in. Is because I had my zone from here to here, and I knew that was slightly kind of wrong because one of the key reference areas I write is called, balanced breakdowns or launching points of directional convictions. That's what this is. You have to draw it not from the wick, from the bar that actually did it on the hourly. See how that really lined up? See how if you drew it from here to here, and that's what I had originally. I didn't even need to see that high. It hit it perfectly. Now I have a reference of bink, dink, and dink. And that's why I didn't wait to here, because then if I had one here, I wouldn't have got in. This was a better gamble than this high, but whatever. I might short, even if this gets stopped out, I might short this one again, depending on if I see some things up there. Yeah, they're insane. The crazy long wicks. So if you saw this crazy long wick on a 15, you know, yeah, I basically the short here has excellent trade location, but obviously it's going against this momentum and it's going against the bias at the time because it's so up, right? It's not just like you know like this day, right? If you shorted this day for whatever reason, um, the opening. Let's just get a better one. That's actually not bad. So if this day opens and it comes down here and then it pops up here, okay, yeah, the Bulls are in control a little bit, but the sustained momentum isn't against you. So you don't have like a lot of things against your short if you wanted to short yesterday's high because of this previous breakdown or something, right? I'm not saying that's a good trade. I'm just saying how you would qualify different things. Yeah, so even on this one, if you shorted this because you were at the zone, you had sustained momentum. I actually, as this broke out, I actually bought this breakout because it was breaking. I call it an IBB. You have to read the momentum, and it has to be within the first like 30 minutes of the open, and it's breaking defined market structure. Once it got overextended up here, I was already taking profits, and I was like, "Don't get in now, guys!" Like it's. And then I was actually thinking maybe even short, but I didn't have the energy for it. That's how crazy these things can turn. In the sideways market, it's psychologically hard to go long short. So even though I'm not trading well, this type of like chop overshoot thing, there was a time in my trading career where I couldn't even go long and short in the same day with real risk on the line because it was too psychologically insane for me. Now I'm like, God, why didn't I do that? It makes so much more sense. Like to make a sideways call, you should have a short and a long potential. You should on a sideways call, you could potentially have more higher. You could have potentially more correct setups than on a day where you're expecting a sideways up, where you're only supposed to take the low of the day, and then if it breaks out, you can't really get on again. Because this was a perfect sideways up call, and you would be taking profits, but you wouldn't want to make an up call because then you would be fading momentum, and then you would get reversed up here. That's why I said, one of the rules I have for the PC setup is you don't take it when you're near really strong resistance that could mark the end of the move. And you're also like measuring the range. Like these aren't just like tiny ranges, guys. This is like 84.4 up to 89. That's like 5,000 points right away. And if we go to the right? And if we go here, right? So now what I'm looking at is just gauging the odds of this momentum. I mean, anything can happen, right? This might look like an inverse line reject in the moment, but then somebody puts a giant buy order in it and it breaks out. And now the structure changes, and now we have a 5 day bounce breakout pattern where things could get really bullish. Is that likely to happen today? I have no idea. It's 74%. What's been happening is every time we've come up there, we've had an active sellers. So yeah, I guess I'll just open the floor if anyone has any trading questions, anything they want to talk about, psychology.
No questions from me.
Yeah.
Just in,
Um, yeah. No, keep at it. I mean, it's all about state change. So it's like, you dressing up in the suit, doing the routines, whatever it takes.
yeah, I had a good trade day yesterday. Probably
Nice,
one of
man.
the best days I had
In the suit.
in the suit.
Hey, there's something to it.
I think so. My wife is loving you right now.
Uh, that's great. Yeah. The suit, getting in character, that's part of what we're doing. So I don't I I don't know. Were you on when we were basically talking about these two big? I mean, you could hear it in the review in the preview, but just zooming out to the weekly, the two big picture scenarios, right? We're at this critical moving average, this 100 SMA that's been acting as support. And just based on the market structure, we're kind of in this balance area. And if we break this balance around 74, maybe 67 area here, even up here, 74 to 79, we're in a bigger picture bounce breakdown that's almost like a head and shoulders pattern. Especially if we get some kind of relief rally up here. And then we get, if we get a relief rally up to 101, it would be a place to reduce risk on all fronts for your position trades, your portfolio. If you miss the top, I would highly advise that because there's a possibility we could go sideways, get a relief rally, build structure like this, and then get a head and shoulders pattern down. Now, we were just talking about fib ratios, extensions, and how prices behaved in the past, and we were just looking at previous making new all-time high to the pullback, right? Every time the breaking of the 1.41 acted as support, we also went up to 2.618 and 2.3. No, 2.36 is kind of like that half. People use zero point 0.5 and they call it a fib ratio. 0.5 is obviously just half off. It's not a fib ratio. Obviously, 2.618 is it's just double the 1.618, and 6.18 is what I use on the intraday time frame. 2.36 is just like another one like zero point 0.5 that's just popular with like just a lot of traders use. And that is one that's been used in crypto. And same thing with 1.41, right? Where the actual really marking of the end of it is 2.36. See how we got to the next leg up, and then that's when it kind of had that immense pullback. Now, if we just do the same thing from here to here, we break 1.41 and then it acts as support, and then 2.36, which would take us to about 157, um, would act as like the bigger catalyst to mark the end of the bull run. And also, if this does mark the end of the bull run, this would be historically the only time in the history of Bitcoin that marked the end of a bull run when the sentiment was in extreme fear. Yeah, and if it did get up to that, would take us to like near 100%. up here to 2.618 to 2.36. But I'm not, I don't know. I could see it going either way right now. Um, I'm just basically relying on basic technical analysis. If this area holds, I'll continue to keep the position trades and the portfolios on. If this breaks decisively, and especially if it breaks this key swing low at 73,452 around, then I'm going to start playing defense and I'll just start say, hey, we're in a bear. I have to reassess, reevaluate, and de-risk. But until that happens, this the potential scenario of at least retesting the all-time highs or a relief rally is probable. I like that we're kind of building, a tight week, whereas in other weeks we actually penetrated the 100 SMA. Now we're kind of we're making almost higher highs on it. And I told this to folks in the channel, just because this had a similar pullback in length and this one actually went more, this was before this started to bounce. This took 1, 2, 3, 4, 5, 6, about 6 weeks, and then before we had a bounce, launching point of directional conviction. So we were on 1, 2, 3, 4, could be 5, 6, and then we get that relief. That would kind of be the Santa Claus rally, but that wouldn't necessarily mean we'd even test the all-time highs. Like I said, I would be in this fib rate range here at the 0.786, even to 100% of the extension, because just keeping in mind bigger picture patterns, this could be a head and shoulders pattern. And one thing that I did see last week that I mentioned, I said this crossed, and it did for a while. This was a nice cross. We want the blue above the orange to confirm the bull case. But as you can see here, just as this in the same previous market behavior influences future market behavior, we did have the bull case confirmed, right? And then we did have the bearish case pop back up again briefly during this kind of sideways dip. And before, so they crossed back, and then we had the sustained blue over the orange. Here, the same thing. Possibly, I'm hoping the same thing, where we kind of around the same level, we have the contraction again, right? Brief period where maybe the orange goes over the blue a little bit more than that, and then they converge again, and then that would be nice because they both hit similar levels. They're both at similar patterns of a bounce breakdown that then is potentially into a bigger picture bull run continuation. It's just that once this becomes a head and that becomes a shoulder, the odds of that happening again are less this time around. But we are still above this area, and we have to remember that this area here is not just any area of support. If we just go back in time and look at confluence, we're talking previous all-time highs from 21, 24, and, so we have a multi-year potential balance we're on top of. Right. That doesn't mean we can't go down there and then go sideways for a while between 60 and 62, and we got too greedy up here. So that's why we got to kind of play defense and see how price reacts to the 100 SMA and this critical area here. So, see if there's any questions in the chat. Are holidays normally big Bitcoin timeframes? This cycle seems to be an anomaly in all cases because back in the day when there was holidays, I just remember like alts and Bitcoin just getting pumped. And it's just because I think retail, with during the COVID times, the checks in the mail, inflation wasn't as bad. It seems like we'll never get the 2020, pre-2020 prices. There maybe was a lot more retail money to go into those types of assets. And the other thing too is that the retail traders aren't sophisticated. So they will continue to buy in extended markets and then get abnormally extended runs. But you can see now that the institutions are in the game. They're Wall Street traders. These are big banks. We couldn't have imagined any of these people 4 years ago being in the market. And now it's just, I feel like a lot's changed in this space. It just doesn't feel the same anymore. And I think AI stocks and other things have kind of pulled some of that excitement out of altcoins and DeFi and DePIN. Uh, and it may be the ultimate bubble that bursts besides Bitcoin and Ethereum. And, that's kind of James Altucher's thesis as well, that it's not going to be the same as it was. And at least it's not, right? It hasn't been. We haven't had an alt season in the slightest. And in fact, a lot of my coins that I've invested in, at least two big ones, were total rug pulls. And, you have to ask yourself, is the juice worth the squeeze in a lot of these cases when, you could have just invested in gold and silver and still had those assets? So greed is a hell of a drug, and the markets are the ultimate tool to weed that out through sheer experiential pain. So to answer your question, I don't think so in this day and age because I think a lot of the institutional buying will be on holiday. And back in the day, it was retail doing a lot of the buying. And I just think now retail buys eggs instead of cryptocurrencies. So, but I hope we get a Santa Claus rally and there's some institutional buying at the end of the year. You have to ask yourself, have you called your local mayor and asked them to establish a Bitcoin reserve? I did that to the mayor in the town over because I went to high school with him. He ran on a platform that he'll return everybody's call, and he has not returned my call. I'm thinking, what? Because I said Bitcoin reserve over here. Get out of here. Um, it still might be a little too wild for people at the local level, despite Texas doing it and Trump talking about it. But besides the whole altcoins not doing well, there will be these isolated projects like a Solana or a Ripple or something like that that will do as an anomaly better than Bitcoin. And I think if you're not in those two, Sween might be, even though it looks like crap, kind of. Not totally. It's kind of pulling back a little bit, but this might be the one with the most upside due to the partnerships and the fact that it's going to get some type of um, Nasdaq index launch. So there's something to this, but like I said, don't fall in love with any coin. I mean, this got to five something, and people still didn't take profits that I know, unfortunately. And it might be partly due to the Tia Bell, saying things like this thing's going to get to 33. But just remember, what beats Tia Bell is just the truth of some of the principles in the daily call of like leg count, even on the weekly. Like how many legs up is this on the daily before you realize there's a huge reversal risk, right? Now, if you got in, we talked about dollar cost averaging between a dollar and 80 when we started talking about this coin. And let's just say one leg, two, three, four, five, six, seven. I mean, you already know that that sideways down for that category. That's like, okay. And on top of it, when a leg count gets like that extended, you have to not just think like that category, would, to my opinion, get more weight than let's just say some previous day's support from a magnification perspective because it's so extended. So we have to also not think in terms of daily call in terms of a list of things and what list tips what more than the other, but also think in terms of the magnification or the size of the isolated attribute itself. So in my opinion, if you saw an 8 leg count in that context that went that much up, then your leg count should get a weight of ×2 or even ×3. So I would count it twice or 3 times instead of just once when you're adding it up. And then you add the RSI to what Bitcoin was doing during those weeks, and there's just no, if we go on the weekly, yeah, you see, for the whole month of July and August, especially right here on this top, that's when the RSI was clearly in a bearish stance. You should have gotten, significantly reduced risk. Like here, you're already pushing it. Yeah, this should have been 100% out. I don't know what the hell. What are you gonna do? right? It's very clear, and a lot of people are using this stuff now, like the RSI, the stochastics, these momentum things, hook from extremes. Everybody's seeing these things now. What we're in right now is a very tricky period where this thing could easily start to look like this. Like, look, we broke down. We're into the last time it did this, it did this. We think this is support. Does a relief rally, pops up a little bit, and then right, you can see the RSI is in the overbought, even though it's not at the all-time highs. And then the next week down, the RSI confirms with a bearish cross. And yeah, see how that's nice? That's not nice, but that's when you're calm and you're not you have a lot on the line and you can think clearly. These tools are very simple and you can really see them nicely. Now let's just see what's going on over here, right? It looks eerily similar. Made a new, popped down, came back up, popped down, came back up. November, right? Even another leg up. Then tried again in October. Came back down violently. Now the difference is that when we came back down here and we made the pop, it immediately went back up into overbought, right? We're here. We're actually in the most oversold that we've ever been in a long time. Not since like around November 22, where it marked the bull, we're kind of at these levels. So that is good. Now, if we go up here around that time, we're here. That's nowhere near as extremely oversold. So that's a contextual thing to keep in mind. That's what's a little different about it. And as much as I want the weekly to cross, what would really confirm it is just a slight higher time frame out, and we're not even there yet. And you can just see like, why does this one work better? Just experiment, right? Like this is each one of these is 2 weeks, right? Then on this week when it broke out, it crossed, and there's no waiting. A little lagging, but still, it kind of confirms it. And we're like I said, we are in an oversold category. Momentum not quite as down as when this bull started, but still, pretty strong in terms of the momentum being down, but still not confirming it at all. The weekly will turn first, and it did for a bit. Like it did this thing, and now it looks like it's doing this, and then we'll see if they can cross back up again because it's not like extremely. It's not like the orange is way above the blue right now. It's sort of like an in between, kind of playing games right now, slightly, but not enough to say that this is sustained or not. Kind of like this, slightly, and then it'll get back, and then it'll start to confirm if we make like that wide bubble bottom, wide bottom building on the weekly. So yeah, sorry if this is some of these fib extensions and some of this seems kind of a little bit more what's the right word? Like I'm speculating in a sense, but I'm just kind of seeing how price behaved in the past and then just saying, hey, this is how previous behavior acted. We know previous behavior influences future market behavior, doesn't have to actually mirror it, but it can influence it. And just trying to make a decision in real time um, with risk on the line and using these systems to the best we can. So that's what I would say. It's like we still have a shot for this fourth cycle aberration narrative where it's not an end yet, but I'm not basing it off what anybody says or how this is the last time we're ever going to be able to buy below 90,000 or any of what the politicians say, like Trump's Jr. or whatever. I'm just going to look at a very simple technical analysis of holding this SMA and holding the key structure of between like 73, these key swing lows, and then thinking about the fact that if that does break, we're in a balanced breakdown, potentially head and shoulders pattern. And even if we do get this sideways up relief rally at the end of this month into January, keep in mind that I may be reducing risk significantly if it gets anywhere near like 100 to 108, because that could be that shoulder where we could still have a bigger picture pattern. So I'm always imagining different scenarios and thinking in if-then statements and trying to make the best decision I can. based on the system. But like I said, the real challenge to doing all of it is, the human being having the patience and just doing the jujitsu of doing all the jujitsu, the mental and emotional jujitsu that you have to do to follow a counterintuitive system. The thought to not jump in early and be patient with the NLP of when you feel the FOMO, you link it to, a cheetah who's really athletic and fast, but he still waits for the most sick and slow animal to hunt to increase the odds of a kill and not get injured. And one thing I could say is just keep at it. Keep at it and keep at it and keep at it. So yeah, so that's it, guys. If you have any questions, you could ask them now or leave them in the chat. But
Thanks, Mateo.
yep, you're the man, guys. All right, guys. I'll see you guys in the room, and I'll be here. You know me. I ain't going anywhere. Take care.